You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hello again, everyone. Welcome back to another episode of the 10 Bagger Podcast. Today, this is episode number 13 with a good friend of mine, good friend of the show. He's the mercenary geologist, Mickey Fulp. Mickey, it's so great to have you on. It's been a little while since we chatted. So first off, how are you doing?
I'm doing very well, and it looks like we're in at least a bull market for gold. And so for the first time in quite some time, I've been taking some money off the table from stocks that have ran up or stocks that have been underwater for a long time. And I say, well, it's run up, and I can get out and move my money into something else that probably has better upside in the near term.
Yeah, that my follow-up to that would be. Because I know you do lots of financings. I guess there's an interesting dynamic because, the gold price has been really strong, but the junior market, it's been in selective areas, it's been very strong. I mean,
haves and have-nots, right?
Do you think there's still really good opportunities out there in terms of financings?
I'm not sure in terms of financings, and over the last couple of years, I have increasingly moved away from private placements in the public venue for a variety of reasons. Number one, most have not really paid off, and you got the 4-month hold. So I moved away from what I did in previous years in the bull market and even in some of the bear market years, and I moved more into early stage financings with private companies that have a road to a public venue at some point, and buying in the open market. So I think I only participated in 2 private placements all last year, and as of this year, 0.
Okay, and I want to talk about 10 baggers. And first, a big reason why I asked you to come on is because when we look at 10 baggers, there's people who they talk about financings, they participate in financings, but there's also, people who buy in the market. And the interviews that I've done, more than 1 or 2 people have said, gosh, you got to be careful about those warrants. Like when you're looking at small companies that can become 10 baggers. Even, one of my guests said that. He said, if you issue too many warrants, like that's the end of your company. I mean, he doesn't literally mean that's the end of your company, but if you issue too many warrants, you basically, unless you get really lucky, you need the market to be really strong to save you. And, last weekend I was reading through your stuff, Mickey, and one of your old articles, you talked about warrants, and I mean, you really, and I just want to stop for a second because there's a lot of big names in the sector who talk about how wonderful warrants are, and sell the stock and just keep the warrant. That's great for you, but I mean, you just wrote a great piece about warrants and the negatives and why you were really bothered with them. Can you just discuss that for our audience?
Well, they become overhangs on the stock as they approach their expiry dates. They increasingly are used by the same people that say how much they love warrants, are the people that immediately sell the stock once the private placement hold is off over at 4 months. And you and I, as Americans, we have, pardon me, another 4 to 6 weeks to get that U.S. legend cleared. So we're immediately behind the 8 ball on that. But they use the warrants as a call on the stock. So all they're trying to do is get off their private placement position, get their money out, make a little money if it's so be it, or break even, and then play the warrants as a call on the stock. And it leads to to increasing dilution. Warrants can lead to private placements that are done at lower and lower prices. And, I basically, when I do participate in private placements, I do it. I've done it over the last couple of years, mainly in the private sector without warrants. And then when the company becomes public, I may have an escrow hold for a while, but I'm not a participant in a regular financing. So unless I've taken this position that the title of the piece, it came out in mid-October for subscribers, and it was made available to the public maybe about a month ago. The title of it is Why Warrants Are the Worst of Wagers, and I really think they are. And it comes from my study over the last 5 or 6 years. Now, admittedly, that was a bear market, but the number of warrants that were in the money and exercisable prior to their expiry dates was a huge minority. Some of the warrants I held have been extended, but most of those are still not in the money. It's a dilutive financial instrument that I would ask that anybody that participates in private placements go back and look at your records over the last 10 years and figure out how many warrants were exercisable and that you exercised and sold at a profit. And I dare say it's going to be something on the order of about 1 in 4 or 1 in 5.
Right. And like you said, admittedly, we've been in a bear market, but I mean, if you look at gold, gold has done pretty well over the last 3 or 4 years, but it hasn't been like that super straight, consistent rise that we had in the 2000s, at least not yet. So, we could, if we're in a bull market, but it's not a rip-roaring bull market, can it still be difficult for the companies who issue all these warrants? It could still be difficult for the stocks to get above that warrant price. Would you agree with that?
Oh, absolutely. And there's a variety of reasons, and I urge everybody, the musing is available on my website to everybody, and it's a short read. I don't know. It's certainly less than 1,000 words long. It might even be about 800 words, and read through it and tell me what you think about it. I've taken a position, and I'm arguing a point. My points are not written in stone, but the avoidance of private placement warrants is one of my new rules of thumb.
Yeah, that's great. So, in that vein, Mickey, then if you're looking for private placements, would you only consider companies that are able to finance without issuing warrants?
That's part of the agenda now. So I'd rather buy on the open market with no hold. I prefer to buy a private placement without warrants. The only way that I will consider one with warrants would be if it is very tightly held and people that I know and people I'm associated with who I know are not going to sell the stock to play the warrants. My group of strategic investors, if they're significantly involved, then I know who holds those warrants, and I know the way they trade, and we're in this together sort of idea with the people I'm associated with. So I won't necessarily reject all private placements because they have a warrant, but there have to be special conditions now for me to consider that.
And when there is a warrant, does that increase the chances that the financiers who participate, that they can short the stock when that 4-month hold comes up?
Well, certainly I mean, anybody can short the stock. I'm not sure that insiders or big investors are necessarily always the ones shorting a stock. Uh, I'm under the impression most of the shorting that's going on in the business right now is due to naked short selling by algorithmic traders located in offshore locations. And I'm working on a piece right now about that in conjunction with a new organization called Save Canadian Mining, and trying to get this rule changed to put the uptick rule back in place.
And just a last thought here on warrants, Mickey. I mean, isn't the whole point of financing a company you're giving your money to a company, you're investing in them, you're hoping that it pays off. And then if you get a warrant and then you turn around and just dump the stock, I mean, it just seems like that goes against the point of financing the company in the first place, isn't it? There's supposed to be a mutual benefit. Like, I'm giving you money, and you're going to work and create and develop something that's going to pay off in the future. I just the clipping the warrants and selling the stock. I mean, to me it just goes against, why would you finance a company in the first place?
Well, a lot of institutionals, a lot of funds, banks, some of the usual big suspects in the business, and brokers and their clients. That's the modus operandi. Is, let's say you do 5 private placements and you sell all the private placements at break even, more or less at the time or soon after that they become free trading. So let's say in a 4 to 6 month time frame, you sell all the stock and you play the warrants. Well, if 1 out of 5 warrants or 1 out of 4 warrants is in the money, then you've made money and you're just playing calls. So it becomes almost a statistical thing with people that do this. We'll go into 10 private placements and sell the stock and break even, and we got 10 calls on the price of gold, 10 calls on the company, 10 calls on the price of copper as a surrogate for a copper exploration company, for example.
Okay, so with that said, we've beaten this thing to death, but I wanted you to do that. So I guess if we're looking at small companies that have the potential to become 10 baggers, you have the share structure, the warrants, very important. So Mickey, talking about 10 baggers, just give me some general thoughts, like in terms of finding or spotting potential 10 baggers. I mean, I know you have a lot of experience with this. So what pops into your head when I mention 10 baggers?
Frankly, I don't know how a speculator searches for 10 baggers. I can tell you what we do, and we're looking for 2 baggers. We're looking for doubles in 12 months or less, at which time our trading philosophy is you sell half and you go find the next stock that you can double. I think it's somewhat serendipitous when you get onto a 2-bagger. A couple of ways that can happen is if you have a big discovery, particularly in gold, in a new unexplored terrain, or a commodity bubble like the rare earth bubble in the early parts of the previous decade, say 2009 to 2012. We had, we meaning my group of strategic investors, or the group of which I'm involved, we had 3 10-baggers or 20-baggers, or in one instance, we had a 60-bagger during that period of time. But that was because it was a commodity bubble. But that said, when you get lucky on a 10-bagger, there's some reasons that you got lucky. Goes back to fundamentals. In any company, you got the right people who've had success in the past and likely have technical backgrounds, i.e. they're geologists or engineers, tight share structure and management has big holdings, so they got skin in the game, so they're operating in their best interests, and therefore in the best interests of their retail shareholders. You need promising geology. You need a geographical location that has infrastructure and easy to get to, and not a horrendous climate. And so a little plug here, I'm a geologist, so I know how to evaluate that part of it probably better than most pundits and newsletter writers. Permissive geopolitics, you want to go into a country where the rule of law is followed and there's secure mineral tenure, and you're not subject to some after the fact resource nationalism. So from that point of view, we've moved more and more into specific countries of the Americas, and specifically into the Western U.S. My favorite venue right now is no doubt the Western U.S., at least for gold. And finally, you need cash in the bank, or working capital, or the ability to raise working capital one way or the other that's not dilutive to your legacy shareholders. So you can explore and make a discovery. And finally, and this is the key to it, and as you know, Jordan, I'm a fundamental guy, and I'm a contrarian. So you want to get in early. You want to find and pick these stocks through really rigorous due diligence and research when they're unknown, unloved, unwanted, and undervalued.
Okay, I mean there was so much great info there. So
that was a mouthful, wasn't it, mate?
Yeah,
I'm sorry I went off on a bit of a rant there, but I'm passionate about this subject, obviously.
Oh, you're passionate, and you're experienced and well informed, and so there's like 2 or 3 different follow-up questions I want to ask. So I'm thinking of which one is next. So I think you basically pointed out, you said discovery and a commodity price bubble. I mean, to simplify it. So let me ask you this. I mean, you may have already answered this, but after something, this is interesting. So, because something that turns into a 10 bagger, it's already, it may have already gone up 2, 3, 4 times, and then it goes up another 10 times. Like when you look at stuff and you start to take money off the table when it doubles for you, at that point, after something has already been successful, I mean, at that point, what factors determine if that is going to continue to rise or if it will just fizzle out?
Well, that's really hard to say, and that's the great unknown. So, and so that kind of leads back to what I first said about the search for 10 baggers is I don't really search for 10 baggers, and I don't know how you know when a 10 bagger is coming. We take money off the table, a double, and then we sell in increasingly spread tranches on the way up. So we're always taking profits once we take our money off the table, which means you got zero cost basis, and then you're playing with someone else's money. You're playing with house money. Hell, Jordan, I might be playing with your money by that time, right? But if you're playing and if you're holding for 10 baggers, you're going to lose a significant amount of your potential profits, because a 10 bagger implies that the stock has gone exponential. So I'm getting into your bailiwick right now with technical analysis. If you get a exponential rise, I can guarantee you, and tell me if I'm wrong here, I'm taking a position and I'm asking you a question. If you have an exponential rise, it would be my position that you are set up for a parabolic top and an exponential fall on the backside. Now, if the stock has good fundamentals, that exponential fall will in no way approach the height of the parabolic. Let me put that differently. I didn't say that quite. The parabolic fall will be at a significant multiple, or should be, to where it was before it started its exponential rise. So you still have profits. So, we very seldom, unless things go up really quickly, sell at 10 baggers. And you got to remember that you must sell stock to make money. Profits and losses on paper are just that. That is not real fiat money.
Right. And I mean, something I learned from you and lots of other people, you got to trim your position along the way. It's exactly what you're, especially when it makes
Yeah.
especially when it makes the vertical parabolic move that you're talking about. And a lot of these things that have become 10 baggers, like you get 30 and 40% corrections along the way. And it's hard to know if it's only at the time. Is it only going to be a 30% decline, or, what if it's a 50 or 60% and it really fizzles out? So that's why, you're so correct about that. You have to trim your position along the way, figure out what works best for you. But
Yep.
Okay, Mickey, with that being said, the reason people are really listening is because they want stock picks. In addition to this bounty or cornucopia of great knowledge that we're giving out here, but people really want stock picks. So with all that said, is it possible that you could share a stock pick or two that you think has big potential?
Well, Jordan, to be quite frank with you, that's restricted to my subscribers only at this stage. So we run a sponsor model, not a free subscription model, but to get my stock picks on a timely basis, meaning a few minutes after it hits the email blast, you'll have it in your email box, and so our stock picks are restricted to our free subscribers, but the price is right. So all I have to do is go to the website and give us a name and an email address. Hell, you can fake the name. We don't care, but you got to give us a working email address. I can tell you a couple that big successes that we've had over the last couple of years. So Ely Gold Royalties has been a 9-bagger. We picked it at 9 cents and it hit 86 cents. So it's last week. It's since settled down at 71. We think that stock still has significant upside because it's being revalued as a royalty company versus what it was before when we first picked it at 9 cents, and it was a prospect generator mainly. In Nevada, Ely Gold Royalties, ELY on the venture. One of our other successes since May of 2017, picked Trilogy Metals, New York American Exchange listed company. It's been a 5-bagger, so we picked it for subscribers at 65 cents. It's been as high as 314. It's about 215 today. It's been knocked down with the price of copper, the panic over some new version of flu that's killing about 1,000 people in China so far. So we think it has additional upside with catalysts coming. So I didn't answer your question, but anything that I think a 10-bagger is not going to go out to the public on the airwaves until I get my subscribers first pick. We are in a new private company that will be public soon called Rockwell Resources. It is a Carlin-type gold play, and how would I say this? Not one of the probably favored geopolitical jurisdictions in the world, but we picked this stock. There's a private placement opportunity still available for my free email subscribers on the website. Because it's got such huge geological potential for new Carlin-type district. Best drill hole so far, and there's been $11 million of private money put into this company. Some of that money is mine. 21 meters of 33 grams per ton gold, and a Carlin system that the rocks look like they could be thrown, the core, a box of core could be inserted into Getchell or Turquoise Ridge, producing gold mines in Nevada, and fit right in.
That's great info. So, but what before I let you go, Mickey, just if you were, I mean, maybe you've already answered this, but just today, if you were looking for something to buy today that has 10-bagger potential, just any thoughts on that? I mean, commodity, discovery, et cetera,
Yep.
I mean, whatever.
Yep.
If you were going to try and find a 10-bagger and you had to buy something today, give us a little help on that.
It's got to be gold, and more likely it's going to be in the western U.S. And if it was in Nevada on a trend, I'd be even more excited.
All right, very good. Mickey, on that note, before I let you go, please tell our listeners where they can go to find your work and how they can subscribe.
Well, I think I've already told you how to subscribe. It's free, so just go on the website, mercenarygeologist.com. Right under my mug shot is a banner, and you click on that, and it takes you about a minute to get subscribed, and about a minute later, you're going to receive an email giving you access to some of my restricted work on the website right now. And finally, at Mercenary Geo, we have a huge Twitter following 51,500 Twitter followers, and we're quite active on Twitter on a variety of subjects. I think you'll be entertained.
Well, I definitely am following you on Twitter. Mickey,
I know that.
Thanks so much
and
for
we
coming
follow
on.
you too.
Yes, thanks so much for coming on. I and my listeners really appreciate it, and look forward to having you back again in the coming months. We could talk more about 10-baggers.
Well, let's hope we all get lucky here as with a continuing bull market for gold, and we all make a stock pick or two that rewards us with eventually, as our positions dwindle and we sell and take profits with 10-baggers.
Thank you for listening to the 10-Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.